Good morning, traders. Welcome to today's market review. This is Fred Razek at CMTrading. Today is October 16th, 2018, and today is Tuesday morning. So looking at the economic events of the day, starting out at 10:30 South African time, average earning index coming out of the United Kingdom. That's the only number coming out. I'm not sure if that's going to be a much of a big difference in the market, to tell you the truth, just as things are already factored in. But just going over a few points before we do some chart work. Turkey releases American pasture. Now, as you know, Turkey and the United States had a little bit of discord with relations to this American pastor who was supposedly an American spy. As it turns out, America had put some sanctions, specifically Donald Trump administration had put some sanctions on Turkey, which is already ailing and economically and having a very difficult time. And as a result, they put enough pressure to release this American pastor. That happened over the weekend. Now, if you remember, about a month ago, now as these sanctions actually went or were going to go into effect in November, the Turkish lira had depreciated all the way to 7. Okay, now it's trading at 558, and we're going to take a look at that in just a minute. USD looks stronger across the board. We'll take a look at that as well. GBP filled the gap. What can we expect next? I don't think this number is going to make that big of a difference. Indices are flat. Okay, we'll take a look at that as well. Gold is a fake out breakout. Okay, we're going to take a look at that as well. So let's see what's been happening. So we're starting here with the Euro USD. As you can see, we made a double top here at 116.03-ish level, and we receded back to the 115.70-ish level. Okay, now if you remember, we had been in this level quite times before, okay, without breaking it. All right, so with that in mind, this is an important point for us to be. Okay, so if we do break this area, we could see ourselves back in the 115.20-ish, 115.50-ish area. Okay, but nothing really happening outside of the realm of what's been happening in, the Euro USD. Okay, the USD has been getting a little bit stronger across the board, but nothing really to write home about. Now, if they jump to the GBP USD, you could see that we had this little, gap down yesterday, okay, as you could see, and then, we filled the gap. This would be the gap down, okay, where the prices were actually the highest price willing to buy was much lower than the previous close, okay, and then, we rallied right on top. We actually filled the gap. All right, now we're filling the gap, and are we going to go down? Okay, as this usually happens in these type of fill the gap type of formations, you actually sell off here. All right, so I wouldn't be surprised if we did sell off right here. We're between our two moving averages. Let's clean that up so you can see that between the 30-day moving average right there and the 14-day moving average right there. So with that in mind, okay, when we see some sort of breakout from these two moving averages, we can expect some sort of, correction. Okay, it's not to say that it can't ever go higher, but as we look at it today, it may just, trade off as it fills the gap. So keep that in mind as that continues to trade. Now, looking at the USD ZAR, the ZAR getting stronger versus a dollar, ironically, okay? Now 1438 here and selling off from our highs. Now, this was a beautiful formation. We mentioned this last week. This was the head and shoulder formation. That was one head, that was a shoulder, that was a second shoulder, and sure enough, it came in, and that was, something that actually fruited. All right, so our next real support level is 14-ish. Okay, as we sell off here, let's see if we do actually close that and sell back to the 14-ish level. Looking at the Aussie USD, let's just jump into it. Is trading also a little bit weaker versus the dollar getting a little bit stronger here, but nothing to write home about. Okay, we're still in an upwards momentum as we made a higher low and a higher high here. So with that said, okay, if we don't break this minor support level right here at 71.21, we may see it continue rally against the dollar. So that's something to consider as we continue trading. Now, this is the fake out breakout that I was mentioning before on the gold here. Gold looked like it was going to take it out further at this 1232-ish level yesterday, and then just didn't, okay, and then faltered, and we're trading at 1225, and that was basically where we were after the announcement last week from the both from the FOMC and the sell-off in the Dow, okay, across the board. So with that said, okay, not to say that this can't continue, making a correction on the upside. However, just realize the fact that it didn't continue its rally. Okay, with that said, it does show a little bit of weakness there as the week continues. Like jumping into oil, we're pretty much flat here at $71, $83 a barrel. Okay, nothing really to write home about, especially after last week's Hurricane Michael. I did expect this to rally a little bit, but not much affected, even though it hit the Gulf of Mexico, hit some of the Florida area and devastated some areas there. So, not affecting the price of oil. So keep that in mind as we continue to trade this. And that means that there may be some continued sell-off. Okay, that's basically what that means. So jumping into the Dow Jones, we could see that it pretty much flatlined yesterday. Not trading too much, 25,268 right now. We've been in this kind of like quandary right now, questionable which way we're going to go. Okay, are we going to correct itself and jump to the 25,700-ish level, 600-ish level? Okay, that's the big question right now. Will the stocks ever come back? So, like I said, historically, this is a sell-off season between October, November, and then between November, December, it's generally a rally kind of time of the year. So just keep that in mind and be open to a couple of several scenarios. Number one, if we do break this area and we break 25,000, which is an important area, we could definitely see it back in the 24,500-ish level. With that said, if it does consolidate here and it bounce a little bit, we could see it just continue trading within a range until we see some sort of solidification, some sort of breakout, especially in the bank stocks, the JP Morgans, the Citibanks, the Wells Fargo, all those big banks in the States, as this kind of new world order is coming into face with the FOMC raising interest rates, which is really a concern. It's a concern across the board as, it doesn't just affect, consumer spending. It also affects people taking out mortgages on houses. Housing market may get actually hit a little bit by as a result of this. The home builder sector, some of the stocks there got hit. So just be aware of that. And it's a whole, it's a whole picture. It's not just parts of it. All right. Like looking at NASDAQ, we bounced off of our lows 71.11.15. So nothing again to really write home about. We're really consolidating at these areas. Okay. And you got to look for the stocks, the big bellwethers in the NASDAQ to see if it's going to jump. So if we're looking at Apple actually bounced higher yesterday, okay, as it had a gap up yesterday as opposed to a gap down, and then it filled the gap and we're right there at the bottom. So this actually might be a good place to actually pick it up. Okay, actually buy a little bit into this, a little bit of this sell-off, as this may be support level. Okay, as long as it sustains this 217, 216-ish level, we can maybe see it actually rallying. Okay, but look at how extreme the moves are, and they're quite volatile. So just be sure to trade it a little bit smaller because, you don't want it to get ahead of you, especially as the volatility is quite awesome. Now, looking at Facebook, this was something of a little bit of an anomaly because I did really think that we were going to break this lower end of this at this 150-ish level, but we sustained it. Okay, we're really trading at this 152-ish level, not selling further low. So if the market does, kind of make some ground back, I do expect Facebook to actually jump in that move, okay, as the market makes its correction after this massive sell-off. Now jumping into Amazon, this was the biggest seller off, okay, if you could call it that, from 2024 double top there, okay, and then selling off to this 1691-ish level, okay, from the extremity. Now we're jumping at 1763. We're still off about 240 points from our highs, but look at that massive volatility, okay, which is probably being affected the greatest out of all the stocks, especially as there's like an impeding doom to Amazon, because Amazon has gotten so strong and so powerful that it's just begging some regulatory consensus, okay, which means the government is going to jump in there and start regulating it, which maybe should or should not be. We could argue that another time. Now looking at lastly at the USD Turkish lira, as you can see, it's getting stronger here at 577, as we mentioned, and slowly, as you could see, it's getting stronger. Okay, it's consolidating at this area 577, but look at the daily chart. Look how high we were. We went all the way up to 7, like I mentioned, and now we're kind of selling off. So this was a minor support level right here at 578-ish level. Okay, so it does break it. We could see it in the low 5-ish level. Okay, that would be the next really correctional move. So just keep that in mind, as the sanctions are obviously not going to go into effect since this American pastor has actually been released. So keep that in mind. This is Fred Razak. I want to wish you guys a great trading day. Thank you.